Good afternoon, everybody. I'm Adam Feldman. I'm a consultant here at the AML Shop, and I'd like to welcome you to today's presentation on the new regulatory changes that are coming into force for the real estate sector. We got an awesome presentation today. I'm going to be talking to Daniel Rodrigues. He's the compliance officer over at Baker Real Estate. Daniel holds a practicing associate designation with the Canadian Anti-Money Laundering Institute, or CAMLI, and he's been with Baker for over 10 years. In addition to being the compliance officer there, he's also a registered broker, so he can really provide some valuable insight into the operational impact of the new regulations, and he knows the questions that the industry wants answers for. How are you doing today, Daniel?
Oh, I'm doing great, Adam. I'm hoping we're going to have as much fun with this presentation as we've had putting it together.
No, for sure. We've already had some great conversations, and I'm sure those will translate in today's presentation as well. Before we get started, though, let's just get a little bit of housekeeping out of the way. So at the conclusion of the webinar, Shamla is going to send out a survey, and we'd really appreciate any suggestions that you have for future webinar topics or things that we might do to improve future presentations. You'll also need to complete the survey if you'd like to receive a certificate of attendance for today. If during the presentation you have any questions about the topics that Daniel and I are discussing, just type it into the chat box. Shamla is working the phone line, so to speak, and she'll pass your questions along to Daniel and myself. All right, so let's get started. And just a bit of background to start off. So in 2019, the Department of Finance released an amendments package to the Proceeds of Crime regulations, and that package was called the Regulations Amending Certain Regulations Made Under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. So the amendments that were included in that package are being implemented according to a phased approach, and most of those are going to come into force in June of this year. In June of last year, the Department of Finance realized that there were still more amendments that were required, and they released a second set of amendments, and they were called, and this is a bit of a mouthful, Regulations, Amending Certain Regulations Made Under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. And the second amendment package also comes into force in June, and this second package has a big impact on the real estate sector. So the second package, it changes the definition of a business relationship for the real estate sector, and it requires realtors, developers, and brokerages to make politically exposed person determinations in certain circumstances, as well as determining the beneficial ownership structure of their commercial clients. Okay, so now that we've gotten that background out of the way, let's just talk about beneficial ownership. So starting in June of this year, when realtors or brokerages or developers, when they deal with a commercial client, as part of the client identification process, they'll be required to determine who the beneficial owners are. So let's talk a little bit about, who's a beneficial owner. According to federal anti-money laundering legislation, that's anybody who owns 25% or more of an entity, and that means direct or indirect ownership. So if you look at this little diagram here, Mr. Y directly owns 70% of company A, and that makes him a beneficial owner. But Mr. X is also a beneficial owner of company A through indirect ownership, because Mr. X owns 100% of company B, which owns 10% of company A, and Mr. X also owns 80% of company C, which owns 20% of company A. So we do a little bit of math, and Mr. X indirectly owns 26% of company A, which puts him above the 25% beneficial ownership threshold. Now, why do we need to know who the beneficial owners are? So it's actually really important to identify the beneficial owners of entity clients, because criminals often use corporate structures and other types of entities to obscure who the true owner of the funds are. So for example, if I'm a criminal, I could set up a corporation, which I could then use to conduct transactions to my benefit and to the benefit of my crime syndicate. Meanwhile, my name's not associated with any of the transactions. And the only way to prevent this is to make sure that reporting entities determine who the true owners of their corporate clients are. Now, the type of information that needs to be collected depends on the structure of the entity. So for corporations, realtors and developers and brokerages need to collect the name and address of each beneficial owner, as well as the name of the director. Collecting director information, I don't think that's anything new for the real estate sector, and that's already included on the CREA entity client identification forms, as well as the other entity identity forms that are used by the provincial real estate associations. For entities that are structured as a trust, realtors are going to need to collect the name and address of each trustee, as well as the name and address of all known settlers and beneficiaries. Now, widely held or publicly traded trusts, it's actually not defined in the regulations, but the FINTRAC glossary does provide a definition for a very large trust. And I think that the real estate sector can use that definition if they're trying to determine if they're dealing with a widely held or publicly traded trust. And the glossary defines a very large trust as a trust that has a minimum of $75 million on its balance sheet, is traded on a Canadian or a major international stock exchange, and operates in a country that's a member of the Financial Action Task Force. For those types of trusts, realtors need to obtain the name and address, the name of each trustee, as well as the name and address of each person that owns or controls 25% or more units of the trust. So for all other entity types like partnerships, et cetera, the real estate sector simply needs to collect the name and address of the beneficial owners. Now, if your client's a not-for-profit organization, in addition to collecting the information based on the structure of the organization, you'll also need to determine if the organization is registered as a charity with the Canada Revenue Agency. And you can do this by asking the clients, or an even better practice, and it's not very time consuming at all, is searching the CRA list of registered charities. And if the not-for-profit isn't a registered charity, you need to ask them if they solicit donations from the public. And just one more thing that's worth mentioning here is that there are some organizations that don't have owners per se, and a charity would be a perfect example of something like that. In this case, you need to keep a record of the individuals that control the organization. For example, the board of directors, or it might be the board of governors. Now, in addition to obtaining the beneficial ownership information, starting in June, realtors and brokerages and developers also need to verify the beneficial ownership information. So, for example, the client has told you who the beneficial owners are. Now you need to confirm that information. Honestly, in most cases, it's not as bad as it sounds. For most commercial clients, you can simply ask the client's representative to provide you with a signed statement that attests to the accuracy of the information that's been provided. And this is typically provided to the client using a prepared template that they can sign. It's one of the most common methods that reporting entities in different sectors use to verify beneficial ownership information. Now, in some cases, you might consider that the client is higher risk, and this is because they have a complex ownership structure. So multiple layers of ownership, ownership across different jurisdictions, that sort of thing. In those cases, an attestation might not be sufficient to provide you with the assurance that you need about the beneficial ownership structure, and you'll need to use another method to verify the company's beneficial ownership. One way you can do that is by using a corporate due diligence tool. And these are tools that are provided by service providers that maintain information about corporations that include ownership details. And they're really great. They can really simplify due diligence, the due diligence that you're doing on your corporate clients, but they don't have information about every single corporation. So if you're trying to verify the ownership information for a corporation that's not included in the database of one of these tools, you might have to use another method. Another downside is they tend to be on the expensive side. Another common method of verifying beneficial ownership that reporting entities use is by asking the client to provide official documentation that demonstrates who the beneficial owners are. So we're thinking of things like, a corporate tax filing or, a shareholders registry. And the downside here, and this is probably pretty obvious, is that requesting these documents can cause some friction with the customer, and you might cause you might get some pushback when you ask for those documents. The last thing that I want to mention about beneficial ownership is that after you take reasonable measures, you're not able to get, or you're not able to verify the information about the beneficial ownership structure. You can still do business with the client, but in that case, you have to treat them as a high-risk client and subject to all of the enhanced due diligence measures that you do for any of your other high-risk clients. You also need to try to verify the identity of the CEO or the equivalent position in the company. And you would do this the same way that you would verify the identity of an individual, for example, getting a copy of a driver's license. Okay, so I've talked for long enough. Let's go to our first poll here. We'd love for you to tell us, how are you planning on verifying the beneficial ownership information of your entity clients? And Shamla is going to post a poll question into the chat here. So let's just take a minute and let people tell us how they're going to be making their beneficial ownership determinations. Seems to be a pretty even split so far.
So Adam, I'm listening to what you're saying, and one thing that jumps out at me is it seems like, previously there were some, I don't want to say exemptions, but rules around very large corporations and record keeping when you were dealing with a very large corporation as defined by FINTRAC, and it seems like those would no longer be the case. Like now it seems that every entity, or at least of the kinds listed in your previous slide, are going to be subject to record keeping obligations when we're dealing with them in the real estate sector.
Yeah, actually, there are still exemptions, not for everything, but there are certain exemptions. If you're dealing with a very large corporation, you would be exempted from certain client identification and record keeping requirements. Same thing if you're dealing with a public body, or a financial institution would exempt you from certain regulatory requirements as well. I think what they're saying is that in the case of a very large or publicly traded trust, you're still required to obtain some beneficial ownership information with respect to those types of entities.
Yeah, so for a brokerage like Baker Real Estate, where we do represent some very large corporations, I suppose the question becomes, but it would seem to me that there is no sort of special treatment of those very large corporations when it comes to the beneficial ownership requirements.
Yeah, no, it's fair. It's fair, Daniel. And I guess there would be exemptions where you would not require to do the same level of due diligence on a very large corporation, one that met that definition, that you would for one that didn't meet that definition.
Okay.
Yeah.
All right. Well, yeah.
Okay.
Adam,
So,
a question. Sorry, Adam. A question just came in. One of our guests said attestations are no longer in line with the rules, is what they understood. Is that true?
Yeah, well, that's actually not correct. FINTRAC just recently updated their beneficial ownership information, beneficial ownership guidance. And in the guidance, they say you can have a representative of the company sign a statement that indicates that the information that they provided was true. So attestation is still an accepted method. And keeping in mind here that obtaining and verifying beneficial ownership information is a reasonable measures requirement. So we're required to take reasonable measures to take these to obtain this information or verify it. And FINTRAC, even in their guidance, has indicated that asking the client would be an example of a reasonable measure.
Thanks, Adam. Another question that came in was, can you give some examples of a corporate due diligence tool or tools?
Sure, I guess I can give the name of a couple of big names in the industry without, with the caveat that I'm not endorsing any of these, but, Bureau Van Dyke and Dun and Bradstreet are the two big players in the corporate due diligence space in terms of verifying beneficial ownership. Yeah, those are probably the two big players.
So I'm wondering, Adam, when we have official corporate documentation listed there, I'm sure many realtors will be familiar with the corporation entity identity identification verification information record. Say that one 5 times fast. That CREA makes available for our use. I know certainly at our brokerage we use those when we onboard a new developer client. And as part of completing that form, there is a requirement to obtain some corporate records. For example, we would often ask for the articles of incorporation, which will list, a director of the company and their name and address. And so would that be something that would fit here?
Yeah, it's a great question, and it comes up pretty frequently. And, I guess that's a good way to verify the identity of the corporation, proving that the corporation exists and who the directors are. That's great, but it doesn't tell you who owns the corporation, who are the actual beneficial owners. And articles of incorporation typically, in most provinces, don't contain information about who the actual beneficial owners are. So I'd say for the most cases, articles of incorporation would not be sufficient to verify beneficial ownership information.
All right, but as part of a let's say a holistic strategy, you could start there because we still have to identify the entity or the corporation, and then go to the person who's listed as a director on the articles and say, could you sign an attestation to the effect of naming who the actual beneficial owners are? Would that be something?
Yeah, absolutely.
As a reasonable measure,
No, for sure that would be perfectly reasonable. Is what's the name and address of the beneficial owners, and yes, I sign and attest that the information that I provided is true. That's exactly how a lot of reporting entities do it. And just looking at our poll question here, so I don't know if you can see that, Daniel, but I
can. Yeah.
Yeah. So do those results surprise you? They surprise me. I'll be honest.
Yeah, frankly, I am a little surprised, that although perhaps not so much with the not sure yet result. I think that's perfectly fair. I mean, this is a new requirement. I'm sure many realtor members are familiar with the concept of beneficial ownership, but as to the requirement to obtain and record that information, that is new, as that's part of why we're here. Like, for example, for us, this is a review year, and we are, as a result of that, in the midst of updating our policies and procedures, a part of which is to encompass these changes. So while I certainly have my thoughts on where we might take this and how we might implement it, we don't have anything in writing just yet. But as you mentioned, the corporate due diligence tools can be expensive, and then asking for official corporate documentation can sometimes be a point of friction with your clients. So yes, I think it's interesting that there seems to be a minority of us who would consider the attestation method, and maybe you could speak to that. I mean, perhaps there are concerns with that method that we should take into account, or.
Well, I guess basically you're taking the client's word for it. So in terms of reliability, it's certainly the least reliable of those three methods. In terms of ease of implementation and friction with the client, there's a lot less friction involved with an attestation than there is with asking for official corporate documentation. It'll be interesting to see if CREA updates their entity client identification form.
Yes.
To include some sort of beneficial ownership collection and attestation as part of that form.
Yeah, that's something we'll be watching for, absolutely.
Daniel, a question came in for you. It says, does your realty company follow a compliance program?
Well, yes, absolutely we do. We have, we put a lot of time and money and effort into our compliance program. Myself and the Chief Compliance Officer, Kim Morris, who I believe is with us here today as well, work very diligently to bring in the best voices from around the compliance community, including the AML Shop, who recently delivered our biennial compliance effectiveness review to ensure that we are maintaining compliance with and sometimes even going above and beyond in our practices, policies and procedures in order to remain compliant with the legislation. And I know, Adam, you and I have discussed some of the ins and outs of that and how it looks, for a brokerage like ours, which is somewhat unique in that we service predominantly pre-construction condominiums and other homes. So we're dealing with very large developers as our clients. Like our clients are not necessarily the people coming into the purchasers, but the builders.
No, it's really a good point. Sorry, Shamla, are there any other questions?
That's it for now. Thanks.
Okay, perfect. So, before we move on to one other thing I wanted to mention about beneficial ownership is that whatever method you use to verify the beneficial ownership information, make sure that process is documented in your policies and procedures. You'll probably hear me say that a few more times before the end of the webinar.
It's the golden rule.
It is. So let's talk about politically exposed persons. And, I'm really going to start from the beginning here because I think this concept is new to a lot of people in the real estate space. So first of all, who is a politically exposed person or a PEP? So a politically exposed person, that's somebody that holds a senior position in the military, the government, or the judiciary. And that's either in Canada or in a foreign country. And the specific positions that would qualify somebody as a PEP are defined in the legislation. But some examples would include, a head of state, a military general or a judge. Canadian mayors are also considered to be a politically exposed person. And there's also heads of international organizations or HIOs that also fall into this category. And a HIO, that refers to the most senior person in an organization that was created by the government of 2 or more states. So for example, the Secretary General of the UN or the Director General of the World Health Organization would both be an example of a HIO. So, in the compliance world, we refer to, politically exposed persons and HIOs. We collectively refer to them as PEPs. And in addition to determining if an individual is a PEP, the real estate sector is also going to need to determine if a client is a relative or a close associate of a PEP. And relatives and close associates are themselves also considered to be a PEP. So, for example, a relative of a foreign PEP would themselves be a foreign PEP, and a close associate of a HIO would be considered to be a HIO. And relatives, when we're talking about PEP determinations, are the specific relationships are defined in the legislation. And generally, this refers to immediate family members like parents, children, siblings, spouses, that sort of thing. Now, a close associate isn't really, it's not defined at all. But FINTRAC does provide some helpful examples. Like a business partner, a senior member of the same political party, or a boyfriend or a girlfriend would all be examples of a close associate. It's probably worth mentioning that a family member that isn't defined as a relative in the legislation, for example, like a grandparent, could still qualify as a close associate. Now, a lot of times when I tell clients about PEPs, a lot of the time the response is basically, like, what difference does it make? Like, why are we making these PEP determinations? And the reason is that PEPs have a lot of influence over policy and the allocation of resources, and this makes them a prime target for bribery and corruption. And because taking bribes is illegal, any corrupt PEP will need to launder any funds that they receive through bribery or corruption. So this is, this is a money laundering concern. So, when do realtors or brokerages or developers need to determine if their client is a PEP? Well, the first one is a transactional trigger, and that's if you receive a lump sum of $100,000 in cash or virtual currency. And you're probably thinking that'll probably be a pretty rare occurrence. But if it ever does happen, then you need to determine if the individual that you receive the funds from is a PEP. Now, entering into a business relationship with a client also triggers PEP determination requirements, and we're going to talk a little bit more about business relationships shortly. And so first, when we need to determine if the client's a PEP when we first enter into the business relationship, and also need to make those determinations on a periodic basis throughout the life cycle of the business relationship. And lastly, we also need to make a determination if we detect a fact that leads us to suspect that our client might be a PEP. And an example could be, if we learn that they work at an embassy or consulate, that might, lead us to suspect that they could be a close associate of an ambassador, who an ambassador is a PEP. So, we might want to make, a PEP determination on our clients as well. So how do we determine if someone's a PEP? So there's three methods, and this might look a little bit similar to what we looked at with the beneficial ownership determination. So the first method is, client attestation, and it's again one of the most common methods that's used by reporting entities, across sectors. And this basically involves providing the client with a definition of a PEP and asking them if they meet the definition and keeping a record of their response. So it's cheap. It's simple to implement. It doesn't cause a lot of friction with the clients. It's also pretty unreliable. I mean, because, if I'm a corrupt politician and I'm concerned that you might discover that I'm using the bribes that I received to purchase a property, it's very easy for me to lie to you and just tell you that I'm not a PEP. So, make no mistake, this meets the definition of reasonable grounds, and this attestation will allow you to meet, your regulatory obligations to make a PEP determinations, but it's basically useless at preventing corrupt politicians from using the proceeds of their corruption. Commercial databases are another popular method for making PEP determinations, and this involves checking the client's name against a list that has been compiled of known PEPs and HIOs. And in one way, this is more reliable than the attestation because you're not relying on the client's word for it. You're relying on a list that's been compiled by a third party. But any commercial PEP list will always inherently be incomplete. After all, there's no way that the list can include and keep up to date every relative and close associate of every PEP and HIO. Not to mention the mayor of every single, Canadian town and village and municipality and township. And the last way to make a PEP determination is through open source research. And what I mean by that is by, researching the person on Google, social media to see if they themselves are a PEP or if they have ties to someone who's a PEP. And if you have somebody who's diligent and they're an experienced researcher, this can be a pretty effective method, but it requires those research skills, and it's pretty time intensive as well. But again, whichever method or combination of methods that you decide to use, you need to make sure that your process is documented in your policies and procedures. So what happens if we determine that somebody's a PEP? Well, if we determine that they're a foreign PEP, or a relative or close associate, they're automatically a high-risk PEP with all that entails, and we'll talk about that in just a minute. If the person's a domestic PEP or a HIO, or a relative or close associate of one of those, we need to conduct a risk assessment to determine if they're a high-risk PEP. Now, for the sake of simplicity, a lot of reporting entities automatically treat all PEPs and HIOs as high risk. But as we'll see in the next slide, there's a bit more work that's required for high risk PEPs. So if your clientele is made up of a lot of PEPs, you might want to consider implementing a methodology for assessing which domestic and PEPs and HIOs represent a higher level of risk, so that you don't have to employ all of those extra measures for every single PEP that you encounter. Some of the factors that you might consider when you're determining whether you're dealing with a high-risk PEP is, which government or organization does the individual belong to, and does that organization or government represent a higher level of risk? Transparency International is an organization that maintains a list of industries and regions that represent a higher risk of corruption. Something else that you would consider, obviously, is if the person hasn't been forthcoming or honest about whether they're a PEP or a HIO, that should be a red flag. And lastly, if the person has previous connections to bribery or corruption, well, that should be a big fat red flag. And if you determine that the domestic PEP or the HIO doesn't represent a high risk, you don't need to take any other action aside from keeping a record of the risk assessment that you conducted. Now, if you determine that you are dealing with a high risk PEP, you have to take some additional measures, and those measures depend on what triggered you to make the PEP determination in the first place. So if the determination was made as a result of a business relationship trigger, so remember that's either entering into a business relationship, a periodic PEP determination of a business relationship, or detecting a fact that the client might be a PEP. So what you need to do is you need to determine the client's source of wealth. So in other words, where are the different sources that their money comes from? Is it investment? Is it savings? What's their financial profile? You also need to treat the client as high risk. And that means, conducting whatever your standard EDD measures are for all of your high risk clients, for example, more frequent monitoring of the relationship. Now, the actions. Yeah, sure.
Sorry to interrupt. I just have a good question that came in that some banks refuse to deal with PEPs just because it's more work. Does being a PEP preclude a person from being a client of your brokerage? Daniel.
And I guess that's a question for Daniel.
Yeah.
Yeah. So I think the answer to that is, again, like we're dealing with the builders and developers here, and they tend to be, in fact, all of them are Canadian companies with offices in Toronto, Montreal, maybe Vancouver. So they tend to be large corporations. They're not like individual purchasers coming to the sales offices. And so in that regard, when we're asked to make a PEP determination, if it does exist, it's going to tend to be, maybe so-and-so is related to the mayor of Mississauga or something of that nature. So, I guess the question becomes, are Canadian politically exposed persons treated the same way as foreign ones would be? And in that case, I don't think it precludes someone unless, as part of the risk assessment, it becomes clear that that it exceeds our risk threshold. Like if someone turns out to be a politically exposed person from a country that, let's say, FATF also highlights as a high-risk jurisdiction, that would lead to some questions that could lead to us refusing to deal with that individual. Yes. So yeah. I think the simple answer is it's a case-by-case basis.
Thanks, Daniel. There's just one more question, sorry, before we go on. What if a PEP is a rental client? Do we need a monthly SOF for each rental payment, or only once at the time of onboarding the client?
Yeah, so I guess let me just start that by saying that rental clients are outside of what qualifies as real estate activity under the regulations. So there would be no requirement to make a source of funds or source of wealth determination for a rental client. With that being said, it might be a best practice, based on the risk tolerance of an individual organization, but there is no regulatory requirement with respect to rental transactions. And just one thing I want to add on, just based on what Daniel was saying, is that again, as a best practice, a lot of reporting entities do make PEP determinations for example, the directors or the beneficial owners of an entity client, but there is no regulatory obligation to do so. That requirement to make PEP determinations refers specifically to individuals and not for entities.
Perfect. And Adam, one last question. If a client is a past PEP, for instance, a former mayor, are they still considered a PEP now?
Hey, that is just an awesome question. So if someone is a foreign PEP or a relative or close associate, then they are a foreign PEP for life. So, it doesn't matter if they've been out of office for, 50 years, they're still considered to be a PEP. If they're a domestic PEP or a HIO, then they continue to have that status as a PEP or HIO for 5 years after they leave office. And that might be something that when you're conducting a risk assessment of a domestic PEP or a HIO, that you might want to consider of whether they're high risk, because obviously their connections are going to diminish over time. So somebody who's been, out of office for 4 years might be, less risky than somebody who's been out of office for 6 months. Was there anything else, Shamla?
No, that's it. Thanks so much, Adam.
Great. So now, if we do determine somebody's a high-risk PEP as a result of making a determination based on a business relationship trigger, as a result of a transactional trigger, and remember that's receiving $100,000 or more in virtual currency or cash. So first of all, we need to take reasonable measures to determine the individual's source of wealth, just like we did with the business relationships. We also need to take reasonable measures to determine the source of the funds or the virtual currency. So, that's a little bit different than the source of funds, the source of wealth. That's where did this $100,000 come from, which is different than where does your money come from in general. And lastly, the transaction needs to be reviewed by a member of senior management. And, of course, because the client is high risk, they're also subject to other enhanced measures like, more frequent monitoring. And the last thing I want to talk about here with respect to PEPs is, the time frame for conducting, all the different PEP measures that we just discussed. So within 30 days after the event that triggered the PEP determination requirement, we obviously need to make the PEP determination. If the client's a domestic PEP or a HIO, we need to conduct a risk assessment. And if we determine that the client is a high-risk PEP, we need to complete all of the prescribed measures, such as source of wealth, source of funds, etc. All right, so it's poll time again. Let us know how you're planning on making your PEP determinations. Is it going to be an attestation? Are you going to be referring to a commercial database, open source research, or maybe you're still figuring it out? What are your thoughts here, Daniel? Like, how are you planning on doing this? I guess you're probably not going to have to make a lot of PEP determinations because you're dealing primarily with corporate clients. Do you think you're planning on making PEP determinations on some of the principals of those clients, though, like directors and officers, owners?
Well, Adam, I think this is an interesting one because it does sort of delve into an area where, one could find themselves in a position asking your clients questions, that like you always want to avoid coming across like you're interrogating, and to say to someone, like, we need to do a politically exposed person's determination with you here because there's a chance you could be related to a corrupt mayor, is not the way you want to go about it. But as you pointed out, you know, our clients are large institutional developers, and given that there's no requirement there. However, I think it's always incumbent upon the reporting entity to have procedures in place, you know, for when policies and procedures in place for when these situations do arise. And that's something, you know, like we are going to be addressing this requirement in our policy and procedures update. I will say that I thought it was interesting that what you had to say about the attestation method, because to my knowledge, I think some of the other reporting entities, like the big banks, you know, that's sort of the direction they're taking it, you know. And so the question becomes, well, you know, like we're all reporting entities governed by the legislation. So if it's good enough for the banks to simply say to a potential client, well, look, are you or any of your close relatives or associates, you know, one of these categories, then why would it, you know, why would it not be okay for us to use something like that?
No, it's 100% fair. And like I said, attestation is probably one of the most common methods that's used across, across different reporting entity types. And that would include banks, or in that sector. But as I pointed out, each one of those methods has its own advantages and disadvantages. And a lot of the bank, I'm pretty sure every single bank uses a combination of methods where they would you just see the attestation, but in the background they're checking against commercial lists, and if they have any kind of suspicion of high risk, might be doing open source research as well. Yeah.
And I would say that that's the approach that we would take to it as well. I mean, in those rare instances where someone comes into a sales office, unrepresented and becomes a client of Baker Real Estate, we would look at, there's a term for this, when you look at the confluence of factors and how they come together to, like, does it create that reasonable grounds to suspect, I think is the FinTrack term. Do we need to escalate this beyond saying, like, does this apply to you? Well, no. Okay. And do we have a reason not to take you at your word? And then, of course, when, like open source research can be, just a matter of running their name through Google and seeing what comes back, As far as the commercial databases, that's not something that we generally venture into. But again, that's speaking from our perspective, where we're, the vast majority of our clients for whom we would be required to make this determination would, it's not the case, right?
Yeah, no, for sure.
So it might be beneficial to a brokerage that specializes in a different area where they do have a lot of individual clients to investigate and perhaps invest in those commercial databases. But then it becomes, which database do you use and who do you trust? And I think many of us would want some direction maybe on where to look for that kind of thing,
Yeah, for sure, and again, there's a couple of big players out there, without, again, not endorsing any one particular solution here, but like Dow Jones and LexisNexis are two of the the big names out there in terms of sanctions lists and lists of PEPs are two of the big solutions that a lot of reporting entities use.
Yeah, no, I'm just wondering, is OSFI still publishing that? They used no.
Yeah, so OSFI never published a list of PEPs. OSFI published a consolidated list of the different terrorist entities across the different sanctions lists, and they actually stopped publishing that in July of 2019, I think.
So so it does become kind of a an interesting thought, right? As an industry, we're being asked to make these determinations about individuals, and but at the same time, what we're not told is, we expect you to consult this resource, because I will say that one thing that does come up when it comes to FinTrack compliance is we're not law enforcement, we do our best, but at the end of the day, it's, you know, we're a customer service business, not a law enforcement business. So.
For sure, you know, I definitely hear that from a lot of different clients. But you know, I guess the answer is that FINTRAC does not maintain a list of PEPs, but there are commercially available solutions that do. And you know, just taking a look at the results of the poll here, again, does that surprise you based on, you know, your knowledge of the industry?
Well, I would say, what with this being a new requirement, the still figuring it out category, you know, being the majority here, that doesn't surprise me. You know, as I've said, even for us, we're updating our policies and procedures right now. So there is still an element of that. You know, I am somewhat surprised though that there's a and maybe you could speak to this as well, that there's such a high percentage of realtors going for the commercial databases. You know, maybe there is a better knowledge of what's out there than I thought.
No, I'll be honest, is that, you know, I'm a little bit surprised by that as well, pleasantly surprised. You know, because there's some great tools out there. You know, as I mentioned. But you know, my expectation was that, you know, the attestation would be in the majority, but it's actually in next to open source research. There's only a couple of people who are thinking of the attestation, so that comes as a surprise to me as well.
Yeah, well, it brings to mind, for example, with that list that OSFI used to publish, and you know, sometimes when you would do sanctions list screenings with that list, you would find people, you know, buyers whose names kind of sort of matched, but you know, maybe they would have a different middle name, or maybe they had the same name, but then when you delved into it further, the date of birth was different, and so it can actually be a fairly intensive process, you know, to rule people out. And then of course, you know, if you're a corrupt, politically exposed person, you know, it wouldn't be outside the realm of possibilities that you would be using pseudonyms or other methods to conceal your identity. So.
Yeah, and that really comes back to that, you know, that investigative and research skills. You know, that's really, you know, key to clearing those matches or those potential matches.
Mm-hmm.
Shamla, do we have any questions on this topic here?
We have a few questions, so let me read through them fast. It's FINTRAC's PEP guidance says that there is no requirement for you to have a proactive process in place to detect facts about existing clients. So for a company, does making a PEP determination only at the beginning of a business relationship, would that satisfy the requirement?
So no, not as of June. As of June, real estate developers, as well as every other sector, will have to make a PEP determination both when they enter into the relationship, as well as on a periodic basis throughout the life cycle of the relationship. So until that relationship expires, you are required to make periodic PEP determinations. What the period of that is, that needs to be defined in your policies and procedures.
Okay, perfect. And can an attestation be digitally signed, or does it have to be a physical signature?
Yeah, so you know what, I think I might have, maybe attestation is actually not quite the right term here. We're not asking get somebody to actually sign anything. It's basically asking the client, are you a PEP? You know, here's a definition of a PEP. Does it describe you? And then keeping a record of their response, either yes or no. So it doesn't have to be a signed attestation the same way the beneficial ownership attestation needs to be. So yes, it could definitely be done digitally, having somebody click a yes or no box on a digital form.
Okay, and does this have to be done with every client, asking them about PEP and HIO?
For the real estate sector, yes, because the real estate sector enters into a business relationship with every single client that they represent. This needs to be done for every single individual client. So again, not a regulatory requirement for entity clients, but for every individual or residential client you deal with.
Thanks, Adam.
Great. Anything else, Shamla?
That's it for now.
Okay. Speaking of business relationships. Okay, so the business relationship is changing pretty significantly for the real estate sector. As prior to June 1st, 2021, so right now, the definition of a business relationship is that a business relationship is established when a client conducts two or more transactions that require a realtor or a broker or a developer to verify their identity within a period of 5 years. Starting in June, though, the real estate sector gets its own definition for a business relationship. And in that case, a business relationship is going to be established the first time that you're required to verify a client's identity. And as I just mentioned, as you need to verify the identity of every single client that you represent, this means that you'll be in a business relationship with each and every single client. So what happens when you're in a business relationship? What does this actually mean? So this stuff is not new, but I think it's worth reviewing. The first thing you need to do is you need to keep a record of the purpose and intended nature of the relationship. And that basically a record that outlines how and why the client is using your services. And it's actually pretty simple for the real estate sector. It can be basically as simple as describing the type of property. FINTRAC gives a couple of examples like purchase or sale of residential property or purchase or sale of commercial property, and that would be enough for your to keep your purpose and intended nature record. Also, as we just discussed, you'll need to make a PEP determination when you first enter into the business relationship with a client and on a periodic basis throughout the duration of the relationship. Business relationships also need to be monitored on an ongoing basis. And this monitoring basically consists of 3 activities. So first off, you need to monitor the transactions that your clients conduct. And the purpose of this monitoring is, in order to identify transactions that might be indicative of suspicious behavior and require reporting to FINTRAC. You also need to apply a risk-based approach to that monitoring, which means more frequent or more in-depth monitoring for higher risk clients. So in addition to monitoring the transactions, you also need to make sure that the client information that you have in your files remains current and up to date. And that means periodically reviewing that information and confirming that there hasn't been any changes. And for the most part, the regulations don't actually specify what information needs to be kept up to date. But FINTRAC has provided some guidance on this. And what they've said is that, reporting entities need to update the information that's needed to get in contact with the client. So, things like, address, telephone number, if, you are collecting that information as an example, as well as the information that's needed to keep your assessment of the client's risk up to date. And an example of that could be, for example, occupation or nature of business. The only prescribed client element that we need to keep up to date is the beneficial ownership information for commercial clients. So for commercial clients, we need to periodically review if there's been any change to the ownership structure. And if we determine that there has been a change, we need to obtain and verify the new beneficial ownership information. And we need to use the same process that we would use for a new commercial client. So remember, again, it's like attestation, corporate due diligence tool, official documentation. Also, just like for transaction monitoring, we need to conduct our client information reviews and updates according to a risk-based frequency. So higher risk client, more frequent monitoring. And the last piece of ongoing monitoring that we need to do for our relationships is to periodically review our assessment of the client's risk. And this reassessment should be done at a minimum according to a preset schedule. For example, that could be every year or every 2 years, but it can also be driven by an event, like at the start of a new deal or filing a suspicious transaction report or being contacted by law enforcement for information about a client. And again, business relationships need to be monitored for the entire duration of the relationship, which lasts for 5 years from the date that the client conducts the last transaction or activity that requires you to verify their identity. Okay, so let's go to our last poll. We'd really like to know how many of you are currently conducting ongoing monitoring more frequently for your high-risk clients. So, while we're waiting for the results to come in, Daniel, how do you do your ongoing monitoring? How do you, for example, how do you keep your client information up to date?
Yeah, I'm just watching the responses come in there. I think this is an interesting one, and like you pointed out, us here in the real estate industry are getting some special treatment where, one transaction is enough to create a business relationship, whereas the other reporting entities still get to use the old definition, which is 2 within 5 years. But that might be a discussion for another day. Regarding the ongoing monitoring, we may not have referred to it as such, but the truth of the matter is, our management team is in regular meetings with our developer clients. Of course, there's Zoom meetings now, but back when it would have been in-person meetings in their boardrooms, and part of those meetings would be asking those questions. Has anything changed, or looking at what's coming, because many of our clients will sell more than one building with us. So which at the outset, of course, because normally there is like another corporation formed, and so we would do the client identification form and get the new articles of incorporation, so on and so forth. But I think really what this is asking is to formalize it in a sense where, and something I've heard about is maybe keeping minutes of those meetings on file where it says, at this point, it being, 3 months since the last time or 6 months since the last time we asked the client to confirm that this, and this was still the case.
Yeah, absolutely. And, you're right, because you are in a unique position where you're dealing with just a handful, you're not just dealing with residential clients, and you could have hundreds of different clients that you deal with all the time. You're dealing with, I guess, I would assume, a fairly set number of builders that you're working with, right? So
we're always happy to meet more, but
of course. Of course. So I'm just looking at the results here. I mean, I'm glad to see the majority of people are doing that more frequent monitoring of their business relationships. And, I imagine that, now that there's clarity, you don't have to guess when you're in a business relationship with the client. You're in a business relationship with everybody. I'm assuming that there will be, more robust policies and procedures around these ongoing monitoring of the relationships, which will just be part of every single relationship, right? So
yeah, well, and what, to be honest, Adam, I choose to see it as an opportunity, for us to reach out to our clients and say, hey, how's it going? Maybe we haven't chatted in a little while, and we have to ask you these questions, but by the way, how's business? What are you thinking of doing next? And so there's a silver lining to what could be seen as a cloud.
No, perfect. I really think that's the best way for people in the real estate sector to handle that, is handle it as a client touch point, a way to maintain that actual relationship with your client, right? Keep them to keep you at top of mind, right? So it makes a lot of sense. So I see we're almost out of time here, Shamla. Do we have any questions before we wrap up?
We do, just a few. Are we aware if CREA will be modifying their FinTrack client ID forms to include questions relating to beneficial ownership and PEPs?
I guess the answer is we would hope and expect so, but I don't know. I don't know if that's the case.
Okay. And if a transaction is completed in 2020 and they don't transact again, is there still a need to reassess, or is it sufficient to reassess at the time of the next transaction?
So this is assuming that you're already in a business relationship with them, is that the case?
Yes.
Yeah.
You've got a transaction.
So I guess yes, this needs to be done at a minimum at a predefined frequency. It can't just be based on the start of a new deal. It can't just be exclusively trigger based. There has to be some minimum frequency in case one of those triggers does not occur within the it never occurs within the life cycle of the business relationship.
Perfectly. And are there some draft version forms on the CREA site? Are you aware of any that show the changes to beneficial ownerships and PEPs?
Again, I would expect that CREA is planning on updating their forms to address the new requirements, but I don't know if that's the case.
I haven't seen anything to that end. Although I would also expect that that CREA. I mean, every time there's been a change in FinTrack compliance, CREA usually follows with updates to their, at the very least, their client identification forms.
I see Stuart here saying on the in the comments there that he's seen those draft forms on the CREA website. So that's a positive sign.
Yeah.
Anything else, Shamla?
That's it. Thanks so much, Adam and Daniel.
Thank you. Okay, so I mean, we're just about out of time here. And Daniel, I'd like to thank you so much for agreeing to speak with us today. Awesome conversation. And thanks to everyone who joined us today from the home or from your office. And just remember, Shamla is going to send out the link to the survey by email. And if you want to be notified about future events, be sure to follow us on LinkedIn. Have a great day, everybody.
You're most welcome, Adam, and thank you for asking me. I really enjoyed being a part of this today, and I hope it's been a valuable experience for everyone listening at home.
I can say I enjoyed it. Take care, everyone.
Thank you.
AML Shop, yeah. AML Shop, yeah.